And before, I worked as a hedge fund manager for 10 years on buy side and on the sell side with the different brokers. And here we are.
Hi guys, hi Daniel. Thanks for the quick introduction. My name is Charlie. I'm running Woorton, which is a market making firm backed by two institutionals in France. We do market making on exchange for spot market, BTC to Euro mainly, but as well as FX currency. We trade between 200 million and 300 million a month on those markets. And thanks to this activity on exchange, we do provide liquidity off exchange to a wide range of institutionals, but I would say mainly in Europe and mainly in the Euro market.
Great. So I think the first question, I want to just do a quick overview. And so let's just talk about market making. Why is market making important in cryptocurrency?
Well, I can start with that. Oh, Misha, sorry, you were about to answer, please.
Please, Charlie, you go ahead.
Okay. So liquidity in the crypto industry is very fragmented compared to other assets. You have hundreds of marketplaces, hundreds of exchanges with different kind of liquidity on those exchanges. Some is really retail driven, some are very algo driven. So the job of a market maker is really to define a mid and show prices around this mid, taking the risk of execution for all the players in the market. So whenever whenever we make market for takers, we are taking the risk for him of execution. We are taking the risk of slippage. We are taking the risk of defining the price. We are taking the risk of buying massively because everyone is selling at some point, or selling massively because everyone is buying at some point. We are basically the ones that allow this market to exist 24/7.
Right. I think that Charlie already described pretty well what we are doing. And I completely agree that the market is fragmented. And I think it's the nature of crypto. There is no one single market like New York Stock Exchange or London Stock Exchange. So there is a lot of exchanges, and the trading happens at the same time, 24 hours on a lot of exchanges. And sometimes it's really hard to execute big tickets. And that's why in this market, I think market makers is a vital part of this market. And I think that with the time, we will see that market makers become the part of this infrastructure, because this market cannot basically function like the classic finance markets functioning. That's why I think market makers is essential part of this market.
Yeah, so I cover the markets at CoinDesk, and I have a book that's coming out called Mastering Blockchain that looks at some of this stuff, and I see it every day when I'm doing my reporting. I'm going to go back to you, Misha. So I think if you could go over a little bit more about the problem in terms of big ticket orders, slippage, etc., that problem and how market making is really important to help solving that.
Yeah, I think that the big problem right now, it's not a big problem by itself, but it's how the market is functioning right now. Because we saw a couple of last years a lot of investments in the infrastructure, like these platforms to store coins, to trade different regulated exchanges. So a lot of money were invested in a couple of 2 years to make it easier for institutions to trade it and to make crypto as established asset. And back to a question regarding the sorry, what was the point?
The problems with big, imagine if I go to Coinbase and try to make a $1 million order, and this is what market making sort of solves, right?
Yeah, exactly. So we are basically providing the liquidity on the both sides and filling this temporal gap between buyers and sellers. And if you want to execute quite a big ticket, you're probably going to move the market, because you have to have access to the hundreds of exchanges at the same time to execute it smoothly. And if you don't use market makers like the Charlie company or mine company, then you probably will move the price, and the arbitrageurs will eat your part of your pie. And that's why we're here, to create some kind of efficiency in the markets and help institutions to trade comfortably with these assets.
Charlie, can you mentioned slippage? Yeah, go ahead. Sorry, I didn't mean to interrupt you, but you did mention slippage, so I wanted you to go through that a little bit for folks.
Yeah. I agree with everything you said. The fact that market makers are able to trade big blocks, the fact that actually we do manage the slippage, or actually, whether if we manage it or not, we take the risk of managing it for our counterparties. We show them a risk price, they take it, and then it's up to us to deal with it. The way we hedge or whatever is not up to our counterparties. Once they got their price, it's done. So that's the thing. But what I would like to say is, especially in the crypto market, when you're a customer trading on a retail broker, with a retail broker or with an exchange, there is not necessarily someone facing you at this precise time. Most of the time, you're going to trade against the market maker. And yes, market makers help to trade big block. Yes, market makers help manage slippage, but actually 80% of my volume are low tickets, very small tickets, coming from retail broker, coming from market liquidation from exchange. Sometimes you maybe have on an exchange 100,000 people selling at the same time their 1,000 euro worth of BTC. For us, it's small ticket, but we do take a lot of inflow, and we have to manage this. And then the challenge is not only financial, meaning, yes, we have to show tight spreads. Yes, we have to manage the slippage. But in terms of technology and infrastructure, we have to be able to show them thousands of pricing, several trades per second, very trustworthy API, working at any time during the day. And this is not only being able to take a 1 million euro price. Yes, we do this. Yes, we have family office that do it, but I think it's even more than this. We do trade with the biggest retail broker in Europe, and believe me, they do not trade 5 million tickets, but they do trade a lot of volume, and they do send a lot of taker volume. And as a market maker, you have to take it as well. You have to manage it as well.
I want to shift a little bit. So the way I look at the structure of the crypto market is you have the spot market, right? So you have these spot exchanges. You get what we would call retail. So that's just like your average person going to maybe buy some Bitcoin on Bitstamp or some exchange like that, spot exchanges. Another dynamic is the over-the-counter market, also known as OTC, where some folks, let's say, for example, like a Michael Saylor will go to Coinbase's OTC desk and say, hey, I only want to buy $500 million worth of Bitcoin. Like, can you help me with that? So could you guys talk a little bit about the interaction between these spot exchanges and OTC and how that affects you as market makers? Charlie, I'll let you go first.
Okay. So yeah, I think what you're talking about is very specific again to the crypto industry. The exchange, because I think there are two reasons. The first one is because they are the companies that are making money and having a lot of customers and having a lot of visibility. So when you come into this market, Coinbase is one of the first name you heard about. They have a very good reputation. They are showing the way. And in the crypto field, exchange are not doing only a marketplace for people to trade. They are doing many things. They are keeping their money. They are custodying your crypto assets. They are educating you with a lot of content. They are doing a lot of things. And I think the OTC is one of them. It's not their core business. It's not what they have been building for years, but it's the one we call when we have such trades. For instance, we have been working with OTC Kraken, the OTC desk of Kraken, for years now. And when they have trades like this, they don't necessarily use the liquidity they have on their exchange. If they can, they will do. But if not, they will protect the best interest of their client. And the best interest of their client sometimes means calling guys like us. So if they have to split, trade a bit on Kraken, trade a bit with us, they will do it. And I think, I don't know because I have no information about the trade you mentioned, but I'm sure Coinbase did it in a way that they protected the best interest of Michael Saylor. And this must mean being connected to different market makers, being connected to where the liquidity is very, very deep. And they, I'm sure, take the best price they could by trading with different desks.
Same question for you, Misha. If you have any different
I think
that
relation. Thanks. I think that relation between spot, OTC, and derivatives is a long story. And what I see is that actually right now we have OTC is the biggest chunk of the market. So just because we have all these problems that Charlie already talked about, the fragmentation of the market, a lot of exchanges, and OTC is the king right now. If you want to trade, you probably won't disrupt prices on your own exchange, or just kill the price on some particular exchange. Even if it's liquid enough, you probably call the OTC desk and try to split this ticket into several, and then go back to the client and get the best execution that you have. But my understanding is that it's not going to last forever. And from my experience, what I saw in the classic markets and the Shen markets, like crypto today is the Shen market, I think that we will move away from the OTC when the exchanges will increase, become much better with their infrastructure. And I think derivatives plays a huge role in that. And if you ask me what's the connection between OTC and derivatives and spot exchange, I think that first of all, we will see a lot of risk hedging on the derivatives. Right now, it's mainly gambling. And I think that with the time going on, and when all these derivatives exchanges and spot exchanges will upgrade their infrastructure, we'll see much more flow coming into the exchanges and derivatives exchanges for immediate hedging of the big tickets, or like whatever ticket you want to execute. And that basically will drain the OTC flow. But that's not the question of today. I think that's something that will happen in a couple of 2 years.
You mentioned derivatives several times, and I think there's been like some regulatory headwinds with derivatives. For example, an influential venue in the past had been BitMEX, but now we have CME. We have some other interesting venues out there now, a little bit more on the regulatory side. In some ways, is there anything maybe you're seeing that is developing for the derivatives market into 2021 as we head into the next year?
Well, I think definitely what UK proposed for derivative platforms is the kind of an estimate what will go on with the rest of the derivative platforms in the rest of the world. I think that we will see more and more regulation come into the space. And I think that's good, because actually we will see less gambling and more natural flows on these exchanges, on these derivatives exchanges. And for us, like professional market makers, it's also good, because we will use these markets to hedge our own risks. And I see that options market is actually booming right now, and my prediction for 2021, if you ask me, it will be year of options. So we'll see less, interest in kind of perpetual products, and in futures, we will see more interest in options, because I think that it's something that is completely clear for institutions. They know how to work with options, and I think that we will see some kind of pickup of activity in options next year.
Charlie, do you have any thoughts on options, futures? Have you recently been liquidated on BitMEX for a long?
So no, I haven't. But what I can say is, end of 2019, beginning of 2020, we've been seeing the futures market really, really pumping up. And I think the main reason is because a lot of players, Misha mentioned gamblers. I don't know if it's the right word, but it's close to the truth enough to use it. And I think those players were looking at capital efficiency, and the futures was the first response to it. meaning they could basically leverage the low capital they had and trade on big loss or big earnings. And that's why we've been seeing the futures market becoming more and more liquid, because the kind of player we have in the field love to optimize the capital they have and the capital they deploy. But this means two things. Yes, you optimize the capital you have, but you take counterparty risk that you don't want to take forever. That's the first thing. And the second thing is, you mentioned the regulation that finally came and maybe froze a bit this market. And then we have been seeing the DEX pumping up. And that's funny because the DEX is definitely not capital efficiently for the player like us. So those two paths are very different from one to another. And it's very funny to see how the market is being split between those. And I don't know how it's going to be in 2021. Maybe the option will be of interest. For now, we are missing some solution actually. So of course, to any entrepreneurs working, I suggest you work on this, because I'm sure you will have a lot of clients. And if there is a good solution for option, I might agree with Misha that it can be a very hot topic in 2021.
You mentioned DeFi, and so we'll go down that path, I guess. The summer of 2020, at least in the Northern Hemisphere, was sort of like this summer of DeFi. And for some people, it kind of came out of nowhere. I mean, it was a lot of developers working on Ethereum for many years for it to kind of gel this year. But there's like this whole dynamic of automated market making in DeFi. And so, Misha, maybe I'll start with you. Can you sort of explain like how market making works in sort of with these centralized exchanges? And if you could talk a little bit about automated market making in decentralized exchanges, or can what you're doing in the centralized world work in the decentralized world? Like, how do you see all that sort of coalescing?
Yeah, good question. Thanks for this. I think that the main difference for us, for market makers, is that DEX is much more less interesting for us because of, like Charlie mentioned, it's not capital efficient. You have to deposit 100% of your funds with the DEX in order to be able to do something and provide liquidity. And the interesting part in DEX is that actually you have a lot of opportunities for arbitrage, and I think that's what's driving what's fueling this basically interest in indexes and in these protocols, because a lot of these transactions that are going on is the arbitrage transactions. People are trying to arb different exchanges, different contracts, trying to squeeze something from this, and it's a bit different business for us. So on the centralized exchanges, we are just doing the job that nobody can do. We are just providing this liquidity on the both sides. Either you buyer or seller, you're just trading against us. In DeFi, there is a completely different story. And for me, DeFi is something that looks like Bitcoin in 2014. Because back in 2014, when I realized what Bitcoin is, and when I started to think like what we can do with this, what kind of services we can do, I checked briefly and I understood that actually market is not ready at that time. And the same I can see and I can tell about DeFi right now. Probably in a couple of maybe 2 or 3 years from now, we will see a real killer app on DeFi. And it's going to be much more interesting than just lending and trading.
So Charlie, same question, but also, are you market making on Sushi Swap? Yes or no?
No, we're not.
I had to ask. I mean,
yeah, no, you're right. No, I think we've seen with DeFi what we love about crypto and maybe what we don't. What we love is that a year ago when we were talking about DeFi, we were like, it was nothing, very small. No one really understood it. If you were talking about it with someone outside of the crypto world, it was like, what are you talking about? And a year later, we went from 600 million to 15 billion locked into the DeFi industry. Yes, it's still small, but the growth is impressive. You've been talking about a killer app, Misha. I agree with you. Yet I think the product has been really improving. If you look at what Uniswap is doing in Compound, we have to congrats those guys, because it's really impressive the way they have been building and attracting yes, crypto native player, but people that were not using DEX before because it was just awful to use, and now you can actually trade. There are some liquidity and everything. So it's impressive. And as a company in the space, we had to do some stuff in the DeFi industry. So we did. We market make on Kyber network for a while, where we provide liquidity for the Melonpot protocol, which is a non-chain asset management protocol. And we will be market making and deploying capital on Dexter, which is a Uniswap-like DEX developed on the Tezos protocol. So we're trying to do some things, but let's be very honest. And as Misha said, it's for a player like us, it's less profitable. We have to put more money. It's 100% capital to deploy. So yes, but because we live in the space and because we were trying to participate to the development of it, yes, we. So it's not sushi swap, Daniel, but we're trying to do some stuff.
I was close.
Yeah.
So I wrap up the markets in the U.S. every day with a column that talks to traders, hedge fund managers, and market makers like yourself. The way I structure the article is, okay, so we've got Bitcoin. Like, that is by far for traders the most liquid. Then I cover Ethereum. Today in my column, I'm going to do a little bit on XRP because it's third and volume has really jumped. Misha, do you guys just market make on those top assets, or are there other assets that you feel like need more liquidity and like that's sort of where your business is going? Like, we just haven't really discussed different assets in crypto, so I wanted to sort of make sure we cover that.
Mm-hmm. Yeah, for sure. All my experience dealing with the equities in the past, and especially with the illiquid equities like small caps, is telling you that the interest in these small caps appears suddenly and disappears suddenly. And that's basically what was going on with these tokens like Sushi and Uni. It's just a spike of interest, and a lot of people trying to trade it. Volume increases. Some other exchanges starting to list this stuff, like even centralized exchanges. And then it disappears basically. So for us, it's not an investment grade. Let's say it. I think that's the only coin that has investment grade right now is BTC. That's the only one. Everything else is kind of frontier markets for the institutions. And back to the question, do we quote XRP? Yes, we do on multiple exchanges. But the primary reason is because of it has the opportunities to hedge, so we can hedge it out, and we do like top 10, top 15 coins. Yes, so no problem. If there is a volume and there is opportunity to trade on the other exchanges and we can quote, then fine, we can do it.
Yeah, same question for you, Charlie. And also, do you market make Dogecoin? Yes or no?
No, we don't market make for very small tokens because we don't have we don't add any value to the liquidity of it. So I mean, yes, we could invoice some token issuer, but we do not. What we do is we are active 24/7 on the top 8 against a lot of FX currencies. So on overall, we are active on about 90 pairs 24/7 because we do trade BTC against USD, CHF, GBP, Euro, and so on. And we do stream those prices through our API to our client as well, off exchange. And that's where our core focus is.
I get asked this a lot, like, why am I always talking about Bitcoin all the time? And it's the dynamics of just like what you just said, Misha. Like, and I just kind of want to settle this whole, why aren't you covering XRP, Ether? Like, is there any chance of any of these other assets actually ever overtaking Bitcoin, or is it just Bitcoin is always going to be this super liquid situation in the market that people can get in and out of, and then maybe go to other assets. Like, what are your thoughts on that?
Well, I can start.
Okay. Let's go, Misha. It's your time.
Okay.
My bad.
Thanks.
I'm trying to alternate here, guys.
Well, I think that you can compare like Bitcoin and other coins as probably gold and silver and platinum. Maybe imagine that platinum is some other token, and you can see that the market for even platinum and even silver is a magnitude lower than for gold. And the same thing with crypto. I think Bitcoin some kind of escape velocity, and it's just far away in the space. It's just not possible right now for Bitcoin to get back to the earth and be like a crap coin, let's say, in that way. So other coins didn't escape velocity yet, and we will see. It's only time will show. Probably Ethereum is the #1 candidate to escape velocity in line with Bitcoin. Probably some other protocols or tokens or coins. We will see, because at this point it's hard to understand who will succeed eventually. Because with all these coins, probably except maybe Ethereum and maybe a couple others, they have this 51% problem, and you saw a lot of attacks that people trying to build blockchain, trying to convince other people to use this blockchain for smart contracts or for some other reasons, and then there's 51% attack comes in, and nobody trusts this coin anymore. And I think that the power of Bitcoin and why it escaped velocity is because it's practically impossible right now at this point to make a 51% attack. And I think that the next coin which will gain the same level of trust, then probably it will join in this journey.
I know you're ready to say something, Charlie, and I'll make sure the next question goes to you.
No, if I can add something, because obviously, what Misha said, I agree with you. What I can add is a market maker doesn't necessarily have to be long the assets to do his job. So if tomorrow BTC is not working anymore, and we're still happy to work in this industry, I will be the first doing market for ETH or XRP. And be embracing the fact that it's the new biggest token. If now I'm talking as not as a Woorton CEO, but just as Charlie as an individual, I would say BTC is going to be the first for a long time. And the way institutionals are building their investment thesis on BTC, I don't see any other crypto building the same level of attractivity to those players. So maybe I'm wrong. I don't know, but even if I'm wrong, I will be happy to jump into any other tokens that appear in the industry.
How competitive do you feel the market making environment is? Like, is there a lot of people that are trying to get into this, maybe from traditional finance, or there's also, I feel like, some pretty old school crypto people that have excess liquidity, and I've heard of them trying to do market making too. Like, is it like a really cutthroat business, or what are your thoughts on that, Charlie?
Yeah, two things about this. First, in the US, you have some incumbents that do market making on the crypto market for years now. They are very well funded, as you know, and they are very competitive because they do it for years, and because it's very reputable companies. Then comes Europe, where none of the players are funded in euro. So that's where we can be very competitive, because even when we are in competition with a huge company that trades for decades, the fact that they are not funded in euro is very makes them not go tight and catch a lot of liquidity. So that's where we capture our market share compared to our size is crazy, because maybe we are one of the only one funded in euro. And then a lot of players have been pumping up saying they do market making. Some of them are just doing market replication, which is not exactly the same, meaning they just replicate order books from one place to another, which is actually a very good service to have when you build an exchange, but it's not exactly the same job. And for those players, we end up providing them, because if they do replicate an order book where we do market, they just have to plug to us or player like us. And in the end, you have the market that is maturing, and you can differentiate the different kind of player. And over time, we will see and we will be able to position all the companies on the value chain. I think it's done in the US because it's more mature, but it will happen in Europe as well.
Misha, what do you have, like a specialty that you've sort of decided on in the market, or?
Yeah, so we are basically focusing on the exchanges themselves. So we are building the top-notch infrastructure to trade efficiently on these exchanges, and we believe that the majority volume will move to the exchanges with the time. So right now the OTC desks, like I said, they are king, and they have all the flows, they have connections to the different institutions. And regarding the competition, I think that when the market is booming, like it's booming today, it's enough space for everybody right now, because market is growing fast. And the other thing that is actually quite good for us, for me and Charlie, for example, is the regulation, because like 3 years ago, anybody could become a market maker, and anybody could start doing this type of business. And today we're coming close to the point when it's going to be a regulated business. Anytime you're exchanging crypto to fiat and crypto to crypto, you have to be in compliance with the central bank regulations, either you're in France, in Portugal, or in the United Kingdom. And I think that's raises a barrier to entry, and that's basically good for the industry and good for the clients, because they got a better service.
You mentioned 3 years ago, and 3 years ago at this time, price was going out of control. Yeah, we hit a new all-time high recently around that, price range. One of the things that was really different back then, and like you said, like anybody could really do this, this concept of custody started really getting like some steam in 2017, and like, could you talk a little bit about custody, like how you handle custody, why it is an issue? I guess you want to start with why it is an issue, and then what you're doing, and maybe like how things are different from where they were in I guess 3 years isn't that long ago, but it actually, in crypto years, it seems like 20 years ago.
Yeah, exactly. So first of all, I think that if we're talking about custodians and this type of business, it's completely different business than market making. And historically, regulators were they obliged the companies to do this in a different entity. So you cannot be a broker, you cannot be exchange at the same time a custody, like the modern exchanges today, like Binance or any other exchange, you name it. And in classic finance, that was for a reason, because the different risks are associated with that. And in crypto, custodian, I think, is the one of the backbones of the institutional markets, because if you're just rewind 3 years ago, there was a hack after hack, and you saw that the people they lost their private keys, they were hacked, man-in-the-middle attacks. A lot of people with a self-custody lose their bitcoins or whatever the coins they got, and actually that was a big problem. And right now, 3 years later, I think this problem is largely solved because we got this raise of these independent custodians. And I think for institutional investors, it's a must, because they don't want to take additional risk. They want to take the price risk of the asset. They don't want to take the risk of risk of hacking or risk of losing private keys or anything like that. They want to trade it, and they want the price appreciation or whatever the trade strategy you have. and you don't want to have the other headaches.
Yeah. So custody, Charlie, we're gonna have to wrap up here soon, but of course I want to be
very quickly
here.
No, very quickly. I'm not going to talk about the tech because I'm not a tech guy, and many people can explain how custody has been improved over the past months and years. But just to say that the use and the solutions that have been popping up, help player like us. We do several settlements a day, and when we were trading in 2018, we were doing it with cold wallet and managing the key ourselves. So it was a bit risky, and most of all it was slower than now. Now you have non-custodial solutions that allow you to add some governance on top of your key and rebalance from one place to another. And in the crypto market, it's vital because you have one-sided flow everywhere. Retail broker will only buy, and then you have some other places that will only sell. At some point, you have to rebalance your wallets, and the solutions that are in the market help us do so. So I think that's that's what have changed for player like us. For the rest, for the retail industry, it's even different. But for the player like us, solution fits perfectly our needs now.
Okay, and so we are out of time. It is shameless plug corner, though. So I am Daniel Cawrey. I write market wrap every day for CoinDesk. It comes out at the market close every day, CoinDesk.com. It's usually sitting right there. We're going to turn it into a newsletter starting in 2021. I'm also the co-author of Mastering Blockchain from O'Reilly Media. That is out in digital form now and will be in print next week. We have a print event December 15th on CoinDesk.com that will be streamed there. Misha, where do people find you? What are you up to? I'll let you go, and then Charlie, and then we'll sign off.
Yeah, thanks. First of all, I would like to say thank you to the Charlie and organizers of this awesome forum. I think it's a great event, and I'm happy to be here. You can always find me on Telegram. It's STIROL2K, or on internet, VelvetFormula.com, and VelvetFormula on Twitter. Please get in touch. We will have to talk.
Cool.
Charlie?
Thanks, Daniel. Really appreciate your question and the way you covered the topic. Was very insightful, I think, for people, for the audience. Misha, my pleasure, and I hope we'll stay in touch in the future. And you can reach me wherever you want, Twitter, Telegram, any page of Woorton. Feel free to reach out. Anyone from the team will reply. We're very, very responsive. So thanks a lot, Daniel and Misha. My pleasure.
Yeah.
Thank you, guys.
So thanks to the Paris Blockchain Week Summit. See you guys later.
See you. Bye bye.
Have a nice evening. Bye.